The US just reported CPI data. Their inflation data is out. It is sort of as expected, but core CPI is the hottest since February. How are the tariffs being reflected in that? And what does it mean? Like, how should we interpret those numbers? Will the Fed cut twice this year, or did the chances of that happening just get diminished? We will speak with Dr. Marc Faber. He's the author of the Doom, Boom, and Gloom report. We've had him on the program many times, and I'm excited to have him back today to discuss what has been happening with gold and silver, and what is priced into the gold and silver price right now a lot as well. So we got lots to discuss. And before I switch over to my guest, hit that like and subscribe button. Helps us out tremendously, and we much appreciate it. Thanks so much for doing that. And Dr. Faber, it is great to have you back on the program. Thanks so much for joining me.
Well, thank you very much for having me, and good day to your viewers and to your listeners.
Yeah, really looking forward to this. I just mentioned it. Like we've just gotten the CPI print in the US about 10 minutes ago, before hitting the record button. And headline CPI was as expected, but core CPI is much hotter. And now the question is like, what is your take? Like, what is reflected in those numbers? Are the tariffs starting to seep through, Dr. Faber?
Well, I think that nobody should seriously believe the statistics that are published by the Bureau of Labor Statistics in the US. I think that over the last 30, 40 years, they grossly understated the rate of inflation, and they continue to do so. The inflation around the world is much higher than what governments are telling you that it is. Inflation is essentially an expansion in the quantity of money, and when prices go up, whether it's for stocks or for homes or for bonds or for commodities or for consumer goods, it's a symptom of the increased quantity of money that has been created by central banks around the world, notably, of course, by the Federal Reserve in the United States. So we have statistics by private economists, among others, John Williams of Shadow Stats, who shows that the rate of price increases for consumer goods and services is much higher than what the government is publishing. So I think you shouldn't pay much attention to what the government is publishing, except that Wall Street and the portfolio managers, they like to believe in these figures because it's good for their business to say to the clients, look, the inflation is coming down, is great to attract new money into funds and so forth. Because if interest rates go up, obviously the valuation of equities as it is at the moment is problematic because stocks are highly priced in the US.
No, very, very high. What is it? 209% market cap to GDP. So very high. And one other thing, Donald Trump appointed E.J. Antony to the head of the Bureau of Labor Statistics just today as well. And we interviewed the new head of the Labor Statistics office just a couple months ago. So I'm curious what he will do once he's fully in office. And hopefully we get a chance to interview him again as well, which would be great. But coming back to the tariff debate, Dr. Faber, real quick, I'm just curious, like, what are you looking for when you look at the inflation statistics? Where do you see it popping up? Do you expect it to pop up anywhere there?
Well, the tariffs, of course, will increase prices. There's no question about it. Corporations are waiting to increase prices, and they will be hit with these tariffs. And so they will try to pass it on to the consumer. Say Nike gets hit for importing shoes from Vietnam, China, India, and wherever, and then they add some to the price at which they sell the shoes to the dealers and to the shops and so forth. So it's passed on to the American consumer. At the end, the majority of the tariffs will be paid by the American consumer. And when I finished my studies, I took a PhD. I wrote about the financial reform of Robert Peel, which involved essentially bringing the United Kingdom from a system of protectionism through the Navigation Acts and the Corn Laws into free trade. So I'm quite familiar with this subject. The tariffs are, they are a tax, a consumer tax, like a sales tax, and it hits usually the consumer the hardest. We should make no mistake. When Trump says that he's cutting taxes and so forth, the tariffs are a tax and they will increase the price the consumer pays in the supermarkets.
You've been saying like liquidity has never really been tightened. M2 money supply is at a record high, and you've been pointing that out in your reports as well, right?
Yes,
Like if you combine this now,
yes.
tariffs plus record M2 money supply and record liquidity, Dr. Faber, where do you think inflation should officially be then? Like you've been citing John Williamson here. Like if you were to combine that, like what should the official number be then?
Well, my view would be that for you see, every household has a different rate of cost of living increases. Say you have children that go to universities, your rate of consumer price and service inflation is much higher than a couple who has no children. Or if you're younger, you don't have very high health care expenditures. And so each household has a different profile. But my view would be that the typical household around the world, and certainly in Western countries, his cost of living are increasing by between about 6% per annum to 12% per annum at the present time. That would be a fair kind of assessment. You just have to look at, say, insurance premiums, what you pay for your insurance, what you pay for electricity, and so forth and so on. It's not 2% as the government claims or 3%, but it's 6 to 12%. Exactly how much it is depends. Are you in this city or that city? Are you in this state or that state? In this country or that country? But it's between 6 and 12%.
Yeah, it's just, and we've talked about this before, Dr. Faber, as well. But in the current scenario, let's assume 6 to 12% real inflation. Why should the Fed cut interest rates at all this year? Why should they?
You know, I all my life I've been critical of the Federal Reserve and of central banks. I don't think something as important as money in society, in the system, should be left to a bunch of academics in a glass building somewhere in Washington or in Paris or in London and so forth. I think it should be the power of central banks should be reduced meaningfully. Now, the central bank, and I have been critical about their position because they base their assumptions on the view that asset markets, when they go up, has nothing to do with inflation. When you drop money from helicopters onto the earth, the money can go anywhere. It can go into stocks, it can go into commodities, it can go into real estate, and it can go into consumer prices. And so the Fed and other central banks, they only call inflation when the money flows into consumer prices. But in fact, you look at the real estate market around the world, particularly in the US, affordability is at the lowest level ever. You understand the problem. You print money, and the prices of properties go up a lot. It enriches people, it creates delusion of wealth. But people that don't have a house, they suffer because they can't afford to buy the house. Young people can't afford to buy a house or a condo and so forth. So this is a big problem. Now, uh, as I said, I've been critical about central banks all my life. But now I have to be ashamed that for the first time I sort of agree with Powell. I think he'd be crazy to cut rates with the stock market at an all-time high, with bond spreads between high quality and low quality at the record low, and with the VIX index so low, and with the existing speculation. Margin debt just hit $1 trillion. You have speculation in everything. What the Fed should do is tighten monetary condition. But as I said, you take my case. My liquidity has improved over the last few years because 5 years ago, I didn't get any cash flow on my cash. But now I get 4.5%, in some cases 5%, and so forth. So my liquidity is much better than ever before. And I don't know exactly how the Fed calculates the liquidity. Say 5 years ago, the market capitalization of, say, cryptocurrencies was maybe a few $100 billion. Now it's $4 trillion. That creates liquidity in the system. And I mean, I'm not sure people know what money is. Uh, in my view, in this condition that we have at the present time, the best is probably to own like gold uh, and silver, because they are monies that cannot be printed. They cannot be increased, the quantity of these precious metals meaningfully. They can be increased a little bit through mining and so forth. But you know what the cost of mining is and the difficulty of mining. But in general, if your objective is to preserve wealth and not to speculate, but preserve wealth, I would advise people to have at least own some of their assets in gold and silver and platinum.
We'll get to the precious metals in a minute, because we really want to ask you about like price, like how the prices have been behaving due to like policy changes and just language out of the Fed here. But you've been calling conditions loosey goosey, coming back to margin debt and the margin debt situation. Conditions absolutely loosey goosey. Like what kind of
Yes.
signal is this? Like, is that the late cycle like blow off top, like with the S&P 500 at 6,400 points? Like, are we at the end of it all? Like, how much further can this go, Dr. Faber?
This is a very good question. How much further can it go? Because I started to work in 1970 on Wall Street, and throughout the 70s, the Dow Jones was never above 1,000. And, you know, when Robert Prechter at the time predicted that the Dow would go to 1,700, people look at him like a lunatic and never thought it would be possible. And in the 80s, there was a group of people at Merrill Lynch, the strategists. They produced beautiful reports, very, very colorful and very well written, very easily to understand. And they predicted a debt collapse that would shortly happen. And now, 40 years later, it still hasn't happened. The issue is you can keep on printing, but the important issue here is when you embark on money printing, and this has been discussed by Mises, von Mises, and Hayek. When you embark on money printing and fiscal deficit, essentially you have to continue, and you have to continue at an accelerating rate. So that's why I think if you look at the last 50 years, we have a peak in interest rates in 1981 and the peak of inflation in 1980. Thereafter, we have disinflation with price still going up, but not at the same rate as in the 70s. And we have an interest rate structure that is trending down until August 2020, when the 10 years note was around 0.5% in the US. And after that, we have a rising rate of inflation and a rising rate of interest. Now, if you look at the interest rate movement in the 70s, They fluctuated widely, but the trend was upwards. I think the same will happen now. Maybe for the next 6 months, interest rates will go down somewhat because the economy is much weaker than what the government is saying. But since the government is lying and Wall Street likes to listen to the lies because they have to lie to their clients that everything is good, so the clients give them more money for investments. So that the whole system is kind of a phony system, is an illusion. But the illusion can last for a long time. In Turkey, in Argentina, and so forth, interest rates were sometimes 100%, but there was plenty of liquidity. You walk around Istanbul, the inflation is high, but you would notice it's a boom town. The traffic is so heavy you can't even walk around. But you understand how long it will last. We don't know. But right now, I have to say, the symptoms of a major bubble are all in place: excessive speculation, excessive optimism, complacency, uh, margin debt that has expanded a lot, and so forth. But the breadth of the market is not very good. So I, I mean, I've been cautious all my life, but I would be careful in particular now. And I think what can happen, and this is important, you take, for instance, 1973, the US market went down and everything went down. Or 1980, 82, US market went down and everything went down. But you take 1989 in Japan, Japan was more than 50% of global stock market capitalization. And it went down, and the money flowed out of Japan into other markets, notably the Nasdaq in the US, that had a huge run between 1990 and year 2000, to be precise, March 2000. So you understand, it's possible that the US market starts to weaken and Europe, Latin America, and Asia picks up, and the money flows out of the US into non US assets. It's a possibility. I'm not saying it will happen, but it's a possibility that I'm, let's say, towing around with, because this year Brazil has outperformed the US by a wide margin. European markets have outperformed the US by a wide margin, and China, Hong Kong have done very well.
Yeah, that's interesting. Like, because we've seen a little bit during the Liberation Day, that, like the week after, a lot of money has left the U.S. and I'm not sure a lot of money has come back yet into the U.S. Right? And there's
I love the expression Liberation Day.
right. No, but the money has left, and I think it was a signal that money is not being treated well. And there was this section, I think it was section 899, I might be wrong on the number, in the big beautiful bill, that was sort of putting taxes on foreign money buying bonds in the US even as well. Like, it was really trying to mistreat foreign investment in the US. Like, you must remember seeing that.
Yeah, it's true.
So it's going where money is being treated better, like like you've mentioned. But you've also mentioned Europe, and I have to ask, I have to follow up. Like, why do you think money would flow into Europe? Is it more of the wartime spending that just it's easier to make money again just to generate returns, or why do you think Europe would be of interest?
Well, I'm a Christian. By is my duty to believe in miracles. Nah, but I want to say, in Europe, in some countries, it's so obvious how the green communists and the socialists have destroyed everything. Whatever they touch is a complete disaster, and it is surrounded by massive corruption. And in my view, the situation in Europe is so bad that the people will wake up and say, we want these people to get out, and they will fire them. So I'm hopeful in Europe. You see, in the US, uh, of course, and I have to say, I would have voted for Mr. Trump because the alternatives are even worse. But basically, it's a sad story that someone who is as ignorant as he is and of very questionable character, he's a narcissist, and these people are actually quite dangerous. Now, these people, but in the US, the economic situation is marginally better than in Europe. You understand? So in Europe, I think that in some countries, the people will move not to the extreme right, but they are portrayed. The AFD is not extreme right. For me, they're also communists, but they are less communist than the other communists. For me, for me, they're the center. But the left that controls the media, they portray them as extreme right. You know, that as extremists, as Nazis. They have nothing to do with Nazism. I mean, it's ridiculous. But that is the way the media operates. And sadly, wealthy people support the communists, the socialists, and so forth because they can bribe them.
That's the scary part, right? Morality, which is actually a really good segue because you've been writing about morality in your August report, Dr. Faber. And now I'm just going to quote the headline:
Yes.
morality is one of the preconditions for the functioning of the capitalistic system. And you're saying morality is starting to fail us. So is that sort of where we're headed? Is morality sort of the precursor? Are we seeing, like you've called Trump a perpetual liar, morality? Is that sort of the beginning of the end for currencies, for everything, and culture's values?
Well, I mean, philosophically, it's very difficult to argue that we have higher morals than, say, the Romans had. You understand? I, this is something very difficult to determine. Are our morals higher or lower than they were at the time of slavery? As an example, someone could argue, oh, these people were evil, they had slaves. Well, there were slave owners that treated their slaves, of course, much better than corporations treat their employees. That I can assure you. And the slave owners, they paid high prices for their slaves. So if you pay a high price for something, you tend to look after it. All these books that were written is all written by the left, by the communists. And they wanted, of course, to write negatively about the rich slave owners. But that was the system throughout history that people had slaves. And I live in Thailand. I mean, my employees here are not slaves, but in character, to a large extent, they are treated like slaves, not in a negative way, but an in, they are a part of the family. Do you understand? I and my wife, we look after them. They have a problem, we help them. And that was the slave owners. Of course, they helped their slaves if they were in need. They didn't kill them after they bought them at the high price. Anyway, to make a long story short, to argue about morals, a Muslim would tell you that we are not particularly moral. And the, the Red Indians in America, the so called natives nowadays, to be politically correct, they wouldn't call the white man and the Christians to have high morals. That I can assure you. But uh, in general, the capitalistic system and the free market depends on you and I agreeing on a contract. We write it down, and the intention is that we keep the contract, that you do certain jobs, you know, we are partners, and I do my part. And so the system functions. Once it's all built on lies, it's going to break down. And I mean, there are books by more intelligent people than me who have written on the subject. I mean, a very good work is Schumpeter's work, Capitalism, Socialism, and Democracy. This is the landmark sort of economic literature that is very important. In particular, it contains a speech which Schumpeter gave in 1949. And the speech is relatively short. I mean, you could read it in, say, 1 hour. And it contains very important insights why free markets and capitalistic system are so successful that inevitably they then shift and trend towards socialism, partly because of the academia, the people that are at universities, the idiots that populate universities and teach your children. They're all left. The ones that lean to the right, they're eliminated.
No, no, they've been pushed out, marginalized to a degree. Dr. Faber, we have like about a minute, 2 minutes left here. We really need to talk gold and silver real quick, unfortunately, or not unfortunately, happily. Like I love discussing gold and silver, but it's a bigger discussion that we need to pack into like a very short time frame. But what are your price expectations for gold and
Yes.
silver and platinum? You mentioned as well, and what is priced in right now? Like what should we expect?
Yes, this is a very good question. What is already priced in? Let me suggest to you the following. If you go around the world and you ask people, what do you own? Most people will own some real estate, let's say, because they don't know anything else. So they own real estate, and they may have bought a life insurance policy or health insurance policy because they have children and they're worried that if something happens to them, then nobody looks after the children and so forth and so on. And then you go around and you ask people about gold. And most people will tell you, yeah, we own gold and so forth. You go to the New York cocktail party and they will say, yes, we have gold and so. And then you dig in and you ask, well, how much? I tell you, the world doesn't own gold at all. The fund management industry, maybe they have 1% in gold or 2%. And individuals, they own a gold coin which they inherited from their grandmother or whatnot. But someone who has, say, $100 million and puts $30 million into gold is very, very seldom. It's very rare. That there are some gold bugs like Eric Sprott and Tom Kaplan and so forth. They have a significant portion of their wealth in precious metals and mining stocks. But the majority of investors, as the prices went up, they sold the ETFs. The net assets of the ETFs, gold ETFs, went down as the price went up. Is very unusual. Now, in the last, say, 6 weeks, 2 months, some money came into the gold ETFs, but not that much, not that much. And I think compared to the liquidity that exists in the world, as we discussed before, gold ownership and silver ownership is very small. Now, I think that right now, I've been saying this for the last 12 months, platinum is unusually cheap because it sells at a huge discount to gold when occasionally, not all the time, but occasionally it sells at a premium to gold. So I would buy platinum at the moment.
No, fantastic, Dr. Faber. I know, like 30 minutes just went by. Really looking forward to hopefully seeing you in Zurich in November, and maybe we can tape another interview in person if the chance or the opportunity provides itself. So really looking
Yes,
forward to that.
sure.
Thank you so much for your time. It was great to see you again.
Actually, Zurich is an interesting case. It belongs among the most expensive cities in the world, but they don't have inflation. That's something to think about. The most expensive cities in the world, among the top 10, are always Geneva, Zurich, Bern, Basel. But there's no inflation in Switzerland.
Interesting. Interesting. No, I'm looking forward to seeing you in person. And we'll send everybody, of course, to your website, gloomboomdoomreport.com, or gloomboomdoom.com is the domain. And really appreciate your time, Dr. Faber. Thank you so much. And of course, we'll We'll be back with lots more here on Soar Financially. Thank you so much for tuning in. Leave a like, leave a comment down below. What do you think is happening? What is priced into gold and silver? What do you think about the labor statistics? E.J. Anthony just has been appointed. Dr. Faber has quoted him as well in his latest report. So let us know. What do you think? Really looking forward to hearing from you. Thank you so much for tuning in. We'll be back with lots more. Take care out there.